I hope you're doing well today. It's Tuesday, the 30th of November, and here just to really quickly run through what we're looking at for the day trading the BTX method, see what happened yesterday, and just look at what opportunities may exist today, what directions we'll be looking at least for our potential trades. So let's just pop right over here and we'll jump right into it. As you mentioned yesterday, Mr. Powell is speaking a little bit later today, here in about about an hour 15 minutes. He'll be speaking about the CARES Act, so could be some sound bites that come out of that, but I think overall it won't have a huge impact on the market. We'll see. So with that said, what are we watching for? Just got to let the plan do its thing, right? We've got a very solid plan of how we trade, a quantifiable reason for entering the market. So we don't need to try to front run that or make any changes to it. We just let the market do its thing. And if it gives us an opportunity, we take it. If it doesn't, then we move on and we wait for the next one, right? It's just that easy. So starting over here with the S&P, we're still looking for short trading opportunities. Yesterday, we were also looking for short opportunities. We can see the market pushed up, making the higher lows and higher highs, higher lows, higher highs, higher lows, higher highs, kept pushing on for us, but never did give us an opportunity to jump in. It never broke back down in the direction of that market trend. It did eventually back here, but not during the hours that we were trading it. So no plans to take any potential trades yesterday. What are we looking at for today? Well, we're still short. 4 hours short, 30 minutes short. We'd like to see the market push up, making higher lows and higher highs, and then we'd like to see it snap back in the direction of its current market bias, which is short, and then trade at the bottom of that previously closed candle if it breaks back down in the direction of its current market trend, right? So that's all we're watching for. If it just takes off like it did yesterday, moves up, 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 then we don't do anything. We just stay away, right? Just that easy. Looking at crude, we did have a potential opportunity yesterday in crude. We're looking for shorts. We're still looking for short opportunities right now. The market's been floating back down as we're, just some news that drove that and a few things that are driving it. But ultimately, we are looking for short trading opportunities. Yesterday, we saw the market pushing down. We wanted to see it making higher lows and higher highs, which it did. Gave us that opportunity to come in. It did. Entered at the bottom of that previously closed candle, and it just took us right out as it made this one little last push higher before it broke down. So on this one, we would have gotten taken out if you had traded that. For our model portfolio, we did not trade this. The reason being, the risk is over $500. You're looking at entry here of around, but right at 70.6, exit, or that maximum risk point, 71.2. That gave us $560 of risk on a single contract. Now, you could have chunked down and traded micros on this. You would have been in the trade. But remember, we started the year prior to micro contracts being available in crude. Rather than switching gears halfway through and changing what we're looking at, we've just opted to keep it as a single contract here, and you're either you're in if it's below $500 of risk. Otherwise, we don't trade it. So this one, if you're trading micros, potentially you were in, got stopped out over here. But if you're trading the full standard lot like we are on the model portfolio, then there's no trade on this yesterday. Today, we are looking for the same thing, though. We'd like to see the market push higher. We'd certainly like to see it push up, higher lows, higher highs, and then break back down in the direction of its market trend, which would give us that opportunity to trade. But it needs to push higher first before we're able to get in to that short trade. Gold is mixed. We've got a 4-hour bias that's short, but the 30-minute bias is starting to turn over on us here, and looks like we're seeing some long opportunities here on gold. Certainly, 1800's been a key level for us over and over and over. If we can break and stay above 1800, I would expect we might see this push a little bit higher. I think it was Singapore just pulled, I forget how many tons, multiple tons of gold out of the marketplace, and that might push it a little bit higher for us. We'll see. Not as concerned about the news as I've said before. Don't get caught up watching the news, thinking about what impact that news might have. Let the charts do the work. The more simple you make it, the more apt you are to stick to your plan, and the more apt you are to be consistent, right? If you start having all these other factors come in with the ifs and the ands and the potentials and this and that, you're not following a plan. You're following part of a plan, and then you're pushing your mindset onto the marketplace. You're pushing your assumptions onto the marketplace, and you're not having a consistent way of approaching the market at that point, because those conditions change all the time. And how you feel about the day as you're coming into the day gives you an optimistic or a pessimistic outlook, and that impacts your trades that you may be taking here in the marketplace as well. If you use something quantifiable that gives you a consistent way of approaching the market, you're going to get consistent results. And as long as you've got an edge with that consistent process, over the long term, it'll play out for you. And that's what we're looking at. Not one trade, not two trades, not five trades. We're looking at that large breadth of trades, over the course of a year, 2 years, 5 years. I mean, you've got to give it time to work out. And we show that, month over month over month over month over month, and on our performance here, just using this very, very simple way of entering the market. So I will be doing a recap on Friday, and we'll be talking about our trade results and how things shaped up for this month so far and the trades that we took. Hasn't been a super light month, and we've got quite a few trades in here, but certainly hasn't been one of the heaviest months either. And that's good, right? We don't need to trade every single day. We don't need to trade every single moment, right? We just need to take the trades that meet our criteria and give us that slight edge in the marketplace. So anyway, I'm gonna leave it here. Looking for shorts on S&P, looking for shorts on crude. Gold is a big X right now. We're not doing anything with gold until we see the momentum change or snap back and confirm the short momentum. But right now, we're not doing anything with gold at all. All right, so that's it.